Bring in Peter McGuire, who's joining us this morning, and the fact that we've got stimulus also having been cleared, we've got an uptick across commodities coming in today. Peter, good morning. Wanted to get your perspective first off, given the kind of volatility we've been seeing on global markets, also given what's happening on the yields. As Aisha said, lots of moving parts that we seem to have been tracking over the last week or so.
Well, yes, good morning, Aabha, and all the very best International Women's Day. It's certainly a time to celebrate. So where we are as far as markets, we saw Friday night, we saw those better than expected non-farm payrolls, and they really shot the numbers out as far as 379,000 versus an estimate of 200,000. So that showed us that analysts don't really know what they're talking about. The second part was we saw crude oil bid strongly up, and on the back of geopolitical concerns as far as Houthi rebels firing missiles off drones and so on into Saudi. So we're at unbelievable numbers as far as crude oil, certainly putting a handbrake on the Indian economy and global economy, Aabha.
Absolutely. So are you worried about the kind of impact it may have going forward? Peter, what do you feel is the upper sort of limit for crude in the near term?
Well, I'm worried on a number of fronts. First off, I'm worried from the price of crude and the unavailability of the average purse coming out of a COVID 2020 that, countries were decimated. Since the Biden administration's come to power, crude oil's up the best part of 55 to 65% since the announcement as far as the election. So we're talking really 4 short months, and you've got that huge rise to the upside. Secondly, you've got ongoing geopolitical concerns across that whole Middle Eastern basin, which is not a good sign for anyone. And the third sign is what impact that's going to have as far as higher input costs, Aabha, for inflation moving forward, and whether bond yields have got to start coming up sooner than later.
Peter, give us a sense as to what you think this is likely to potentially indicate, because most of the analysts believe that now the oil price movement that we've seen is largely likely to dictate the market trend going forward. And, you've got foreign institution and foreign portfolio investors as well as domestic investors that are closely monitoring this movement.
Well, no doubt. I mean, if you're a producer, you must be rubbing your hands with glee. It'd be like that every day, just more dollars going in the ka-ching as far as stronger US dollar and stronger energy prices. So the winners are the producers, the losers, and I just want to repeat that again, the losers are the retail man and woman on the street. They've been absolutely hammered on this as far as their spending power, and then we're going to be hit with naturally higher input costs for all forms of transportation, moving food, services and whatever else across any nation. So we'll be paying more for everything. And the next part of course, is many people are very, very financially hemorrhaged after 2020. So there's no compassion, certainly from the international energy producers. And how coincidental that we see a new administration in America and we're back onto the old rantan as far as missile strikes and all of that leading into geopolitical concerns. Seems coincidental to me.
All right, Peter, we'll let you go on that note. Many thanks for joining in and sharing with us your thoughts on what's going on globally as we're continuing to monitor that movement on the crude oil prices bouncing above that $70 per barrel mark.